Hello friends, welcome to my channel and thanks for watching this video. And as we have ended with one more volatile week, this is the opportune time to discuss about the Wall Street going forward. So welcome you all to another session of a USA weekly market report, and let me tell you, things are getting interesting enough with each and every week that has been passing by. So if you are missing something, you are missing lots of things which you anyways need to understand or at least have an observation on. So let's start looking into the news or the important headlines that has shaped up the market and that will probably have a bigger impact going forward as far as the next week for US market as well as this Wall Street. So let's go on through all the important headline now. I think this is just updated because I've been checking out the website, and this is the updated press release or updated news that's been flashing on the front page. And this news is quite massive, I would say. Forget about the stock market, but the kind of impact it has on the actual economy going forward is quite big, because you can simply see that furniture, auto part and automobiles are delayed at major European ports, and the reason is labor slowdown and strikes are crippling container trade at both German and Netherlands port. Now the problem here is, anyways you are fighting with inflation. The second problem here is companies are struggling to run on their daily business, and on top of that you don't have laborers, and obviously if you want to hire somebody you need to pay them more, much more than you can normally do, keeping the inflation in context or keeping the inflation in front of you. So things are looking quite tricky, and there is no denial in the fact that the kind of geopolitical tension that's been going on, and nobody wants to everybody wants to play the larger game. I don't know what's the intention behind that, and let the overall, let the people suffer. It doesn't matter whether I am suffering or not. Let the people suffer with all the bad policies and bad decisions that's been going on. I mean, everybody try to stretch their legs as far, hands and legs or everything as far as possible, and it's not going to be a good end. That's what you need to understand over here, right? So these kind of things are not at all good for the stock market as well, because whether you understand it or not, big inflation, then you don't have any workers right now. Now you have to pay more. The companies are anyways ready for earnings which are probably not going to be good in the upcoming quarters, and they will certainly make lots of provisions for the upcoming risk, or at least the near term uncertainty that they can see. And this earning season is going to be very precarious, because there are lots of uncertainty for the companies, because companies can give you the actual scenario how the economies run. It's not about the central bank or the government. We can't actually trust 100% on them, but if a company is suffering and the management is saying that they are literally suffering and they are on the edge of their losses, considering the fact that they are doing their business bounded in rules and regulations, so obviously you need to believe them that we have some serious problem going forward. Apart from that, I don't know whether this yield is slowing down or not, because the indications we have here, there is a bit disconnect between the indications and the stock market behavior. Obviously stock market is a future discounting machine, and the kind of fall we have seen in the overall market is very very big. So if market is taking pause and just giving you that rebound, So that's fine as far as the overall trade is concerned, or the trend, but it does not change the trend. That's what you need to understand. Also, this recession fears, I hope the recession will come soon, because that will be an opportune time where the stock market will bottom out. And then you have US approve 820 million aid package for Ukraine. Obviously, things are not going to settle down very soon, or things are not going to end very easily, and uh, what can I say, people will understand all these things, what is actually going on. And if you keep on doing this, let me tell you one thing, it's not about the central bank. Fed can't do anything about the inflation, because it's basically food and energy. These are the two major components, and now everybody, even a layman, can understand what the hell is going on. And even if they hike the interest rate, it will only hamper the business, or will only damage the business, not only in US but across the globe. Because it's not about controlling inflation, and food and energy is something in normal situation is dependent upon lots and lots of factors. But if it is because of geopolitics, then obviously this is not something which is in the hand of central bank. This is out of their territory. That's one must know and understand about. Also, uh, yeah, the eurozone is looking for an inflation, and they are looking for the first rate hike in 11 years. Now this is going to be a very very interesting one, because you need to understand that there are lots of countries which are in eurozone, and if they started rising interest rate, they will definitely be in default situation, because they don't even have the money to service their interest, forget about the principal amount. So this is going to be very interesting how things goes on moving forward, and how the EU is going to or if they want to make the economy good, or if they want to crush the stock market or businesses at the same time. It is a very interesting situation, and how far and how long it can go. It's not about what they are talking, it's about what they are doing. So let us see how things will move going forward. Apart from that, there are analysts which are talking about interest rate cut. Now we will see if it happens. We will see. Right now everybody is bullish, so we have to believe on the central bank, because if they are bullish on interest rate hike, then let's be it. And if they are not following the same in the next 2 or 3 upcoming months, then obviously market will change its view. You need not to think about that. Apart from that, let me see if anything is important over here. Okay, so G7 leaders to set up a climate change and working on decarbonization power sector. Now it's really very very surprising when there are some European countries, they want to reopen their coal mines, and at the same time they are saying decarbonizing. So let's see how things looks like going forward. And apart from that, I have seen one important press release. I don't know where it is. It was just flashed, and it's like it's gone now. So let me search it out, because it was by Michael Burry, and let me search it out for you, and let us see. It has just flashed, and then it's just gone right now. Okay. So yeah, the big shot Michael Burry believes we are halfway through bear market, which means he is anticipating some more downside to go as far as the upcoming trend or the trade is concerned. So this is one of the thing, you can probably go and check it out. Now let's go and see how the market has performed, because Friday was good. Friday was indeed good after a big volatility that we have seen in the US market. So the Friday Dow Jones closed a percent higher, 321 points, and NASDAQ closed 0.9% or 99 point, and a combination of impact on S&P 500 up by 1%. So this is a good session which the US market has shown, at least on the last Friday after a very long time. Apart from that, the gold is sustaining above $1,800, which is good. The oil is stable, even though it cools down a bit, but it is trading at $108, which is really high. Now you have seen that the US 10-year yield falls below 3%, but it is not way below 3%. It is 2.88. Then you have VIX, which is quite high. Even after falling 7%, it is still trading or closed at 26.7. So if you are thinking that things are down, it is not way down, or it is the trend has not yet changed. Apart from that, the natural gas is trading at 5%. So if it is trading below $6, then it is good. Then I would say it is good. It is currently trading at 5.62. Then the trend seems to be changing, but it has started rising again. So we will definitely check the trend for natural gas, because this is very crucial that natural gas must trade below $6. Otherwise, the trend will be on the upside. Now the biggest part of the puzzle is US dollar index, which is now trading above 105. Now this is the breakout zone. It has tested 105 last time, but then it has fallen down to 103. Now it went up and closed above 105. So this is big. This is really very big, considering the kind of news flows that are coming. This is really very big, and this is going to be a dangerous combination, because this will make market highly volatile. So with this, let's start with natural gas. As I told you, this is one of the most important thing if you are looking at US or Europe. So here we are, the weekly chart of natural gas, and it has actually tested your previous resistance zone and started moving higher. So here we are, right? So I think I have said one thing wrongly, and which was $6. It was not $6. It has to trade below $5 for any change of trend as far as natural gas is concerned. So $5 is something, or 4.9 is something we need to look at, and it is taking support above 5.36. So it has to fall below 4.9 for the overall trend to get reverse, right? Because it is still holding its trend and trading above the breakout zone. So above 5.3 it is a positive one, and below 4.9 it will be a negative one. So understand this thing. Now talking about the dollar index, the most strongest one, and as you can see, the last time it has literally hit 105.79, but it was unable to sustain and falls substantially below that, like 104.7, $1 below. But right now it is trading and it has literally closed above 105. So this is not at all a good sign. This is not at all a good sign that the currency is moving higher and the global currency is moving higher, which will have an impact on the oil as well as the economies itself. And don't even think that it's going to help US economy, because they have huge amount of debt, a burden on them. It's going to hurt them as well. So below 103, that would be fine, but if it is trading above 105, you can clearly see a breakout in front of you. And as I told you couple of time, if it holds above 105, then we are here for 120 on the upside. There is no denial in the fact. So probability is now or good possibilities there that the dollar index may probably move towards 120, which means Michael Burry is not at all saying nonsense. He has much more to look at as far as the overall market is concerned, or the kind of data access he has is way more than anybody else, not only in US but across the globe. So those who are skeptical, they have their doubts, or they have their reservations, or they have their facts on which they are believing. But if you are looking at the data, I mean, the data is suggesting that the breakout is happening on the higher side, and this is not good for the equity market, as simple as that. Now, looking at the Dow Jones, it is very close to its support level, and a turnaround, whether you consider this as a dead cat bounce or a short covering for next couple of hours or days, whatsoever. But if you are looking at the overall trend, it looks something like this, and if I may draw a line like this, it is very near to its support level. It is very near to its important support level. So it can move slightly on the upside, and there is nothing bad in it. But the thing which you cannot understand here is, you can't simply mix and match news with stock market movement. There is no direct correlation, because the price movement will happen much before even the news flashes into the market. That's why we are calling it as a future discounting machine. The price is always a future discounting machine, and you can get the price movement done before or at the time news released actually in the market. So 28,465 is going to be your immediate support. So it is not at all near the immediate support. There is still to go on the downside, and if it falls below 28,460, then there is a possibility of 23,000 as well. So be very specific about the movement and understand what is going on as far as the overall range or the trend is concerned. And my interest lies on dollar index, because the dollar index can really shake the market, and more specifically the NASDAQ. And if it is just the breakout that has happened, and if it has way to go on the upside, I am more concerned about the NASDAQ rather than Dow Jones, because Dow Jones mostly consists of old economies, but all the new age companies, all the companies who don't have cash flows, they have literally an idea depend on which the company is running, and there is no actual execution as far as the product or the services are concerned, and they literally suffering from cash right now because of losses. So those kind of business will get will definitely have a very bad impact going forward, and more specifically when the interest rate goes higher, when the currency started moving. And we are not talking about any specific country's currency, we are talking about the dollar index, which is the reserve currency for the globe right now. And if this has started moving higher, it does not only impact the US but across the globe. So if you are looking at NASDAQ, you better look at 9,000 and 8,400 or 8,450 as your next two big support for NASDAQ. So we are here to lose some more on the downside as well. So things are not at all looking good. That's what you can see as far as the trend is concerned. And there are few times, or there are few moments when the news literally makes us feel bad, and this is, I think, one of those days. I mean, looking at this news that you have a massive export bound, and they are sitting on the ports because the goods are not moving from one port to another, and it's because of non-availability of the people. So this is not at all good, and when you are trying to do something which you can't possibly do, and because if you are a developed economy and you are saying that we are going to do this or do that, we don't know whether you have the ability to do this or that, and which will definitely has its repercussions as far as the overall economy and layman is concerned. Now the third point is, it's not Fed who is responsible for the inflation, at least this time. They may be, but this time they don't. uh, you know it's not the Fed responsibility. What they can do, they can increase of the interest rate like anything, but it will have a severe ramification to control the inflation, or to raise the interest rate beyond a certain point will definitely have severe ramifications on the overall economy. And I don't know about the recession, but the demand literally wipes out if they want to fill up the gap between the Fed rate and the actual interest rate or the inflation rate, because at that point you will see nothing is going to be in the favor of the US economy, or not in terms of government, and neither in terms of central bank. So we need to see how far they can stretch it, because things are going literally very bad, very very bad. And I don't want to talk about how much impact and what are the things uh, that will impact it. Everybody knows that right now everybody has the access of internet, and everybody knows what is all the terms, or what is the impact of uh, you know one's decision, and everybody has to face it. So let's see what will happen, but things are looking quite jittery, and the current market, maybe it's 1 or 2 days of bounce back, but you need to focus on dollar index. Dollar index closed at its lifetime high. It's not lifetime high, but it's one of the highs that has dollar index has closed after a very very long time. So it's going to have its impact, or it's going to have a very bad impact on the equity market. So if you want to go for a long term investment, that's a different thing. But if you are thinking about some short term moves or short term profit to be made, then you must have your picks very handy, and you cannot pick and choose some stock which you do not know how it's going to moving forward. And I would say be aware and be safe. That's what I can say. I can make 10 arguments, but that's the ultimate thing you need to understand, that be safe right now, because things are going to get from bad to worse moving forward, and there is a big possibility or probability which is available in front of you. So this is the end of the video. Thanks for watching.